Welcome to another episode of Review Improve, a podcast dedicated to personal and practical growth in the 21st century. I'm your host, Sam Rust, along with my co-host, Mr. Bradley Luce. Brad, I see the sun coming in the window. You're in a blue and white striped t-shirt. You're looking suave. How's it going in California today?
It's good. I've actually gotten so much done today, and I'm so excited. I woke up. It's a Saturday. It's sunny outside. I woke up at 5:45. I got by 10:30. I'd gotten all my reading done, like so my journal done, my Bible reading, my other book reading. I had done my workout. I had eaten breakfast. I had hung out with the family. I had mowed. I had weed whacked. I had leaf blown. I had taken off the satellite dish off my roof. I had patched some holes in the wall, and I had eaten a snack. That counts.
Man.
I know.
Well, it has been a productive day for me, although it did not start anywhere near as early as your day did. So, man, way to list off. That's I feel like that's enough for a day, and here we are recording a podcast.
And I got
Speaking
more.
of
I got more.
journaling and reading and all that, our last episode, the Miracle Morning.
Hold on. This is
Oh,
actually before that one. We're gonna have to get used to this.
oh, we are.
Yeah.
Oh man.
Coming up.
Coming up in a future episode, the Miracle
Yes.
Morning. We talk about our morning routine. So I'm excited to hear that you are jumping in on your morning routine. That's awesome. How is the job search going?
So I've had a lot more interviews lately, but still no job offers. So I'm waiting on that. I've interviewed with like an irrigation company. I've interviewed with a company that makes heart pumps. So if people have bad hearts. I've interviewed with the National Defense Laboratory that kind of works on all the nuclear arsenals around the United States. So just to name a few, but I'm waiting on some more, but hopefully I'll hear back soon. I mean,
Nice. Well, we'll keep waiting, and hopefully something comes through for you here shortly. In the meantime, I know you and I have chatted a little bit about some of your real estate endeavors. Why don't you share with our audience what you've been doing in summary?
yeah. So I've started wholesaling real estate. Wholesaling real estate is what I'm doing. So basically, I find the sellers who want to sell but aren't on the market, like they don't have a real estate agent. They maybe have some code violations. They're behind on their payments, insurance, taxes, mortgage, whatever, and so they can't. This might be a little difficult for them just to hop on board on the real estate agent and sell it on the market. So I find those people, maybe with troubled houses that normal banks won't give a mortgage for or a loan for, and then I hook those people up with buyers, and then I get paid a little convenience fee in there
Nice.
for helping everyone out. So
Have you completed a transaction yet?
not yet.
Not
It's
yet.
coming. It's coming.
It is coming. Well, we will definitely shout that from the mountaintops once that happens. That's awesome.
Yes.
How are you finding these houses?
So it's a
These
lot
owners?
of, yeah, I'm looking for houses that have been owned by the same owner since at least 95. So I'm doing a lot of looking at a lot of houses that were bought back in the 80s and early 90s. And then those houses I take down, shrink down into more of, I want houses that are delinquent, kind of on like care. So then they're kind of run down. They need maybe a new roof, new paint, new siding, just a lot of work, sweat equity into it. And then I send them letters, and I do cold calling, call them up like, hey, I'm interested in buying a house. Have you thought about selling? Is there anything I can help you with your real estate? So I call myself, when I talk to them, a real estate specialist, because I'm not technically an investor, but I'm also not a real estate agent with the licenses. So I'm a real estate specialist that I can help people with their real estate needs. So
Nice.
yeah.
Well, I'll look forward to seeing when your first deal comes through, and you're coming into a good time of year to be starting out this endeavor. So
Hopefully.
that's pretty exciting. Um, awesome. Well, today we are jumping into another chapter of business adventures. I shared with Brad earlier this week, and we'll put this article in the show notes. But this book is regarded as the #1 business book by both Bill Gates and Warren Buffett, which I find interesting, especially considering this book was written in like 1969. So the stories in this book are of another era, but man, there's a lot of lessons that we can pull here into 2019. Today, we're covering the story of the Edsel. Man, I wasn't terribly familiar with the Edsel until maybe 18 months ago when I listened to a Stuff You Should Know podcast about the Edsel and the whole process. I think for generations before you and I, Brad, it was kind of a synonym for failure or for abject failure. But it was really fascinating to dive in and learn a little bit about that process. When I say chapter, it's a fairly lengthy chapter. I think it was like 60 pages.
Yeah, I kept on reading. I'm like, come on, I don't got time for this. But no,
I thought I would just give a brief overview of what happened. And then we could just pull a couple of the things that we both enjoyed about the chapter, things that we took away, kind of a higher level for you, our listeners. Overall, in the 1950s, American consumers were starting to gravitate towards smaller vehicles, and Ford decided that they were going to come out with kind of a premium small vehicle brand. So Edsel, while the name of a car is also the name of a brand, which is something that I didn't realize. So it's akin to Cadillac or Mercury. It was going to be a family of cars. They started development in 1955. The car came out in 1957. Ford anticipated about 200,000 cars sold in the first year. By the end of 1959, so 2 years after its release, they had only sold 109,000. So well short of projections. They invested a total of around $475 million in 1959 dollars into the project, and had to write a loss in 1960 of almost $350 million, which, to adjust for inflation, is equal to $3.1 billion in terms of 2019 money. So a significant write down, just a colossal failure on almost every point that you would measure. So that's kind of the broad sweep of what happened. And why do you think that this was included as a tale, as a chapter in Business Adventures, Brad?
I have a couple of reasons why I think, because they were too slow. They didn't look at the market conditions, and they were just too strong-headed in what they wanted rather than what they should have done. So they weren't changing with investing and with the market and with business. You got to change and adapt continuously. They didn't do that. So I think, at least for me, that my takeaway was like, you got to really kind of like keep on changing, watch the market conditions, and adapt as you need to while still continuing towards your goal.
Yeah. There's so many interesting points, because while on one hand I completely agree with you, they also spent a ton of money in market surveys. Now you can argue, I mean, some of the things they were surveying were people's comfortabilities in making mixed drinks. How that's relevant to your car preferences, I'm not totally sure. But they spent countless hours trying to decide the name of the car brand. Like there was definitely a lot of thought and intentional effort that went into the entire process. But I think something that you said, Brad, that stuck out to me as well was that they, in a way, they almost saw what they wanted to see.
Mm-hmm.
And they were trying to drive demand for a product that was new and maybe wasn't a proven path. You'll hear people like Tony Robbins say often, success leaves clues. Ford was trying to be a trailblazer with the Edsel in a lot of ways. They didn't adjust for the market changing as it really started to change right as they went into the development of the Edsel. And then, but the time they released it to market, it kind of shifted away from underneath them. As a counterpoint to that, though, I kept thinking of Apple during this chapter because the iPhone is a product that was created that nobody had ever done anything like that before. Now, BlackBerry had been on the scene, and so smartphones were a thing, although not really. You know, everything still had a tactile keypad. There was no touch screens, or not one that had hit the mainstream in any event. So there's a lot of, in my mind, there was some parallels, because here Ford is trying to bring a new product to market, a new product type, even though we've had cars for 40 years by this point. You know, and Apple's trying to do something fairly similar in the late 2000s. I just found that an interesting parallel, the fact that Apple took a risk, and for them it paid off. Now there's many differences, both in the technology and the marketplace need, and just the general product life cycle. The smartphone was just in its infancy, and automobiles were fairly mature at that point. But I couldn't help but think of that example as I was reading the Edsel. As you know, there were missteps, and we're going to get into some of those. But the idea of trying to pioneer a new product isn't necessarily an inherently flawed idea. It's just a riskier idea.
So that's interesting you said Apple, because in my mind, I went Tesla, but in a different sort of way. So, I mean, I don't think they're going to fail like the Edsel. I actually think Tesla might or does have a good market hold. But just the way that I don't know, just like when Ford had this huge unveiling, they invited all these news people there. They let them all drive it. They had these fireworks and this huge thing. Tesla does the same thing. Tesla has an unveiling, like recently with the Model Y. They had all the press people there. They gave test drives. They let everyone sit in it, take pictures next to it. And they have these huge build-ups to their releases. And so, and then with some of the issues that Edsel had after, like the body fit just wasn't working. Some of the panels were crooked, and the doors weren't shutting correctly, and the trunk wouldn't open. And Tesla has a lot of those, honestly. If you look back, I mean, they did a lot of the things with their releases. They doing the same what Ford did back then, but I think they're doing a little better. A little caveat.
And you're not
there.
just saying that because you've got a vested interest in that anymore. So, yeah,
exactly. Yeah, they fired me, or
yeah.
they let me go. They laid me off. They didn't fire me.
They didn't fire you. They laid you off. Important distinction.
Yes.
Yeah. So as we're looking at, I think the biggest failure in all of this was that Ford kind of had drunk their own Kool-Aid to a degree, and figured if we just throw enough money at something, we can divine to the last decimal point what exactly a customer is going to want in a car. We can tailor what we think they're going to want. We can even influence what people are going to want, and we're going to be able to come up with a product that'll blow the socks off of everybody. And so as part of that, they started overhyping what happened. And then people just realized this car is a lot like all the other cars, and they almost over market analyzed what was going on, or what the consumer wanted, and ended up with a product that very few consumers wanted. So kind of not a paralysis by analysis, but definitely an over analyzation of what was going on, and then really taking from that the results that they wanted. I think that was the biggest thing, that they weren't paying attention to the market around them. They were too internally focused as they were developing the car brand.
I thought it was interesting. This whole thing started because they wanted to keep the customers longer. And so because their customers would quote unquote trade up and out of Ford, so they'd buy Ford when they were just getting into the car market, and then when they got promoted or whatever and they had more money, they would trade up and buy someone else's car, GM or whatever the big name cars were back then. So rather than Ford just saying, all right, we are going to own this market, they were like, no, we want to keep some of those longer. And I think like tribalism, or that tribe book by Seth Godin we read, if you keep your customers longer, and yeah, that's great, but eventually they're probably going to trade out up and out or try something else. You want to own your division in the market. If you can't own that one division, then you won't go anywhere. So then once you own that division, those people will go out and even get more customers for you. So I thought that was an interesting point, that it all started with they weren't entirely satisfied with what they had which is okay. In business, you always want to be looking bigger and greater, but you also want to own the section you're in before you move out.
Yeah. And yeah, and that's a tough balance though, right? Because you do want to own the space that you're in. You do, if you're making, crock pots, you want to make the best crock pot that you can. But then it's a natural migration path from making crock pots to making Instant Pots, assuming that Instant Pot isn't completely patented. But you know where I'm going. It's easy to transition some of your customers to another base and grow your customer base pretty quickly if you do it right.
Right.
So it's not necessarily that you can never go outside of your niche. But maybe a better recognition of what you're really good at, focus on getting really good at that, and then target selectively and be nimble in in markets that you're going to go after. I think another issue that Ford had was they just committed so many resources and so much money and had such high expectations for the Edsel that when it almost had to fail, there was almost no way that it could live up to the hype. And so I think that if they had taken a little bit of a different approach, hadn't built it up quite as big, and let the momentum build with the car, that it probably would have lasted quite a bit longer and would have been a more profitable, or definitely a less expensive endeavor. But they decided to push all their chips into the middle, or at least all their chips for the Edsel. Interestingly enough, during the same time frame, Ford actually did quite well as a company. A lot of their other cars just skyrocketed in popularity. This is right about when the muscle car boom is about to happen. There's Ford as a company actually did quite well during this time period. Imagine if they had not had this huge black eye, they could have done even better.
Yeah, I mean, that stood out to me as well. They had other products that supplemented the income. So honestly, they walked away and they were not hurt much at all. I mean, they were just like, okay, whatever, it failed. Let's move on. And they didn't really take much responsibility for it. They were more like, oh, it was the market, it was the people, it was the customers, it was everything but us in our car. But even with that, they still walked away with hardly a dent in their income or losses. Even though they had huge losses, it still didn't really, just a small speed bump on the road of business.
Yeah. The even 1959 numbers, it's kind of staggering at the amount of money that they were able to lose and just be fine.
So in 1959, they were selling at a rate of almost a quarter of minimum profitable rate. So they needed to like times that times 4 to actually break even at the rate what they were selling. That's just astounding. Imagine someone doing that in this day and age. I mean, of course, you have companies who are just completely in the red and doing something like that, but I mean, you don't last very long like that.
Yeah. Well, and to keep it at a big business level, IPOs are kind of all the rage right now in the financial world. You've got Lyft that just did their IPO. Uber just filed their IPO. That's going to be going public here shortly. Several other companies, Airbnb is going to be going public this year. Pinterest. Oh, I know Brad's excited about that one. But the scary thing about a lot of these companies is that they're not profitable. And in fact, both Uber and Lyft in their investor guides have a line that says, we may never be profitable. Now, I don't think that they believe that. And Amazon was not profitable for a very long time. And they've definitely turned the corner. But boy, you look at Ford, the reason they were able to survive and they're still around today is they have focused on profitability, and they've always had multiple legs to their stool, where one catastrophic failure wasn't enough to put them under. These new companies that are coming out, man, there's definitely high growth and all that. I get that. And there's exciting things about all the companies we just named, but if you're not profitable, it's definitely cause for concern.
Yeah, and I still am trying to wrap my head around the whole not profitable. I mean, that's a basic thing of business. You gotta make more money than you spend. I mean, that's just a given, you think. But now with the way banking works and loans work and investors work, it's weird.
Yeah. People are attracted by the siren call of high growth. People are chasing growth around the world.
Yeah.
And I think in the back of their minds, everybody's looking at Amazon. Who I would want to be right now is the people that invested in Uber, like Alphabet. Alphabet invested $250 million in Uber about 5 years ago. That investment has gone up almost 800%.
Dang.
Without
Yeah.
ever having made a penny. It's amazing.
Yeah.
But I digress. So let's pull it back in, Brad, a little bit from the big picture. We've talked about big business and what went wrong here, but what are some lessons that you and I and our listeners could apply from the Edsel and the catastrophe that was?
Yeah, I think the first one is, even if you do some research and you see something you don't like or you don't want to see, don't just try and brush it away or say, oh, that's just a flaw in my research or what they're saying. Actually, dig into it, see what that is. You got to be willing to look at the things you don't want to see rather than just what you want to see. That's my biggest takeaway and biggest thing I learned.
I think that's so crucial. I've been working quite a bit on another real estate development. And I just made it a rule for myself that if I'm ever uncomfortable with something, or if I'm not sure, there's a part of me that doesn't want to go look at that. I don't want to go into that corner because I might find out things that I don't like in that corner. Whenever I get that feeling, that is the first place that I go and look. That's the first set of data that I'm trying to verify. That's the first assumption that I'm going to go out and make sure it's correct. Because generally speaking, those are the areas that are the biggest problem areas, and you want to know your downside before you start dreaming about the upside, for sure.
Yeah.
And I think you framed it in terms of business and starting a new business. I think it plays across relationships as well, and just life in general. You want to quantify the unknowns that you don't want to quantify, because the ones you don't want to quantify are the ones that'll sneak up and get you.
Yeah. And especially, and also with their 2-year long research into markets, especially in today's day and age, 2 years might as well be 2 decades. If you wait that long for research plus then coming out with your product, you're going to be so far behind of what the market actually wants now. And I think Jeff Bezos said, it was him. I love some of his newsletters he sends out. He's so good at wording things. And he's like, we don't want to be making what people want today, because if we make what people want today, tonight they're going to throw it out and want something else. So by the time we come out with it tomorrow, it's going to be obsolete. He's like, so you want to be coming out with them as they want it, and then you'll make money. And so Ford spent way too long, especially back then. I mean, or even with back then, especially not today. But
so I'm curious, you worked at Tesla for a couple of years. You can't come out with a car in 6 months. Like, that is the very definition of a long life cycle in product development. Even today, you'll get refreshes. The big car companies will refresh their designs on an annual basis, but they don't redesign their product families but once every 5 to 7 years. How would you mitigate that risk that you just mentioned in some of those longer life cycle scenarios?
I think it depends on what your product is, though, too. Because if you take a gasoline car, that has much more parts and systems inside that vehicle than an electric vehicle has. You'll have maybe a quarter of the parts and systems in an electric vehicle versus gasoline vehicle, because you have your battery that powers everything. So you just have to learn how to distribute that to each system, and what percentage of the battery goes to what system. And so I don't know, because so Tesla calls themselves a technology company. They don't call themselves a car company. So like with their Model S, they came out with it. They have done very little actual reconstruction of the actual physical car, but they're coming out with updates for the operating system all the time, which is increasing the efficiency of those systems and parts within the vehicle. Just because the code allows battery to put more power here, less power there, etc. So I don't know. I mean, it really depends what your product is.
Yeah. And I think, I mean, even Tesla, I mean, how long have we been hearing about the Model Y, and that it hasn't even been released. We just had the press conference here like 8 weeks ago. I think part of it is also just being willing to take acceptable risks. And an acceptable risk, even today, for Ford is going to look very different from an acceptable risk for Tesla.
Yeah.
Tesla doesn't have the margin of error that Ford does. And so I think it's also recognizing your situation. What is my acceptable risk level? How much risk tolerance do I have? And then make your decisions accordingly. I think it's important to not remove risk from life. You and I have talked about this before, Brad. You want to be pushing yourself, but at the same time, whether it's in your business or in any other area, really recognizing your risk tolerance and being okay to back away from things that are just too risky, even if the upside is tremendous.
Yeah. Yeah. Again, it just comes back down for you, your product, your business. It can't be. There's no hard line for it.
Yeah. Well, and I think an example for me personally, being a millennial, I decided that Bitcoin was the wave of the future. And so I wanted to invest in some of that. And so in January of 2018, I decided not to buy into Bitcoin. I decided I was going to buy Litecoin. So I bought into Litecoin. Now, it could have been so much worse. But my investment has lost 60% of its value. Now, it's done really well in the last 2 weeks, and I'm still confident, but I only put in an amount that I was willing to lose completely because it's new, it's untested, who knows what it's going to be, but I wanted some diversification, and I was willing to put a small amount of money into Litecoin. So, I think that's a personal example, not that and I was willing to lose that. So, extrapolate that into whatever situation that you're facing.
So on my side, I was very similar. Like I was like, all right, this might go somewhere. This has a chance of going somewhere, but I don't like want to spend $1 billion or my whole savings into there. So I actually mined it myself. I set up my computer and I started mining electronium. And so I have a good amount. So like honestly, if it goes up to like $50 a coin, I'm going to have enough for like 3 houses cash. But
just for reference, what is it at today, Brad? Are we to a penny?
No, we're not.
Okay.
No, we're under a penny.
Okay.
Yeah, well, that's the thing is I chose one that it's mobile based, that they're targeting casinos and places like that where you have large transactions, just quickly mobile, send it over phone, stuff like that, easy. So I mean, I still think it has potential going somewhere. The code they have is really good, but I was just like, no, I don't really want to put much money, actual money, physical money into it. So I'm going to just mine it myself. I'll pay for the energy of my laptop, the battery, electricity going in there, power the laptop, etc. But yeah, so
nice.
There we go.
Anything else, Brad, as we're wrapping up covering Edsel from Business Adventures?
Not really. I would encourage everyone to go read it, kind of just at least get an overview, hop on Wikipedia or something, find some articles about it, because it's good. I mean, it's good to kind of just learn what they did so you can kind of avoid those main pitfalls. I know everyone has a different theory on why it failed and what happened and what they did and wrong and stuff, but ultimately you got to read it and kind of see what they did.
Yeah, I would also recommend it. Our next episode out of that book is going to be on the income tax, specifically the constitutional amendment that legalized the income tax and the ramifications thereof. So I've already read part of that chapter. Just fascinating to get a perspective from 50 years ago now on the income tax. We were at a very different point in our nation's history, and it's a really relevant conversation today. As there's many competing proposals on what to do and how to to legislate equality or whether we should legislate equality. So in any event, that'll be our next article. We appreciate you joining us. As always, feel free to leave a rating or review on iTunes, Spotify, or wherever else you've downloaded this podcast. We definitely appreciate you, our listeners, and look forward to being with you all in a future episode. Have a great rest of your day.
Catch you guys later.